Hello, good morning. Welcome back to my channel, Hocantalk. Thank you very much for watching my video again. Every day I will produce quality video to help your financial knowledge, improve your business knowledge, so that you can all this knowledge can help your career and also help your business decision. Again, all video will be presented in two languages, one in Chinese, one in English, and also will be using the same format, marker and paper, so that I can concentrate on giving you all the important information. In Chinese it's called 干货. You all talk about 干货. So my video, every page is 干货. And I just want to share all my experience to you, so that I hope you can benefit from my video. So please do subscribe to my video, circulate my video to your friends so that they can also benefit and subscribe to my video, and I have more motivation to do more video. Okay, without further ado, let's zoom in on today's topic. Today's topic, the first slide I've written, oil markets explain. Now, 石油市场介绍. This video is just focusing on to explain how the oil market operate. Okay, I won't go into detail about exploration, how oil is discovered, the chemical composite of oil, where does the word petroleum come from. All this I think is not useful, not important. I don't think you all have the time for that also. This video just want to make sure that after watching my video, you understand how the global oil market is being structured, where are the prices being traded, and some of the crucial information that will help your general knowledge and in your daily usage of the knowledge in your career or in other area. So let's look at the second slide. Now the second slide, I just want to tell everybody there are many types of crude oil. Crude oil is an oil liquid that dig from underground, but there are many types of crude oil. There's heavy crude oil, there are light crude oil, there are also sweet crude oil, there are also sour crude oil. I won't go further into detail in this. I think a little bit of the technical knowledge is that how to determine the oil is sweet and sour is depend on the amount of sulfur inside the oil. And heavy and light is the density. Now there are benchmarks to measure this, but again, this is not this video is going to cover. This video will talk about more financial and business aspect of the oil market. Now let's look at the historical development of the oil market so that you have an understanding why the market evolved until today, why the market operate in such manner. So many years ago, before the 1960s, okay, as early as 1920s, 1910s, the whole global oil market, after the discovery of oil, and then there's formation of all these big oil company like Shell, Mobil, Caltex, all these oil company, and we call them the Seven Sister. These are the huge oil company like British Petroleum. So they actually dominate all these oil reserve in the world. So when a country found oil reserve, because you need a lot of money to do exploration, digging of oil from the ground, and also to do to go and find where the oils are. So all these oil major, because they are financially strong, they actually dominate the oil market, and they use something called the price posting, meaning that they will post the price, the seven of them will discuss, and then they will determine a price to pay to the country that own the oil reserve. So for example, if BP found oil reserve in Iran, and then to rent that oil reserve from the Iran government, they had to pay a royalty, and the royalty price is called a posted price. All these seven major, they discuss what is the best price to pay to the host country of this proven reserve. So this is called the posting price. At that time, all these oil producing country, because of the oil reserve found in their country, they are price taker, meaning they cannot decide. They can only accept the price given to them by the Seven Sisters. Now, after the 1960s, because a lot of these oil companies start to feel that why should we be bullied by all these international oil company, and since each of us are so weak, we had to form a united organization to fight against all these international oil company. So in 1960, there are I think 6 or 7 founding members. They started this called the Organization for Petroleum Exporting Country. So they actually formed an organization. First, it was based in Switzerland, then it was moved to Austria. So they set up this thing, and then more countries join in, and together they fight the big oil company. They take back, they nationalize all the oil reserve in their own country, and then they start to set the price. So it's called the official selling price. Selling price is not the royalty to operate the reserve. It's the oil that come out from the reserve. This OPEC decide what price you need to buy from me. And in order to exert their power, in 1973 they actually do an oil embargo, a famous oil embargo which created the oil crisis. Now the oil embargo, again, I won't go deeper into it. There are a lot of historical things, but very in simply term, it's due to the war with Israel. At that time, Israel occupied some land. So all these oil producing country, which are mainly the Middle Eastern country, they actually do an oil embargo. They actually reduce oil production by 5% per month if Israel refuse to return the land to all the middle country involved. So there are wars behind all these things that lead to the oil embargo. So again, I won't go any deeper because I'm focusing on the business and finance aspect of the oil market. Now, after the 1960s, some smart financial gurus or anything, they come up with financial derivative, meaning like the future, the future contract, the swap, the option, and all this kind of thing. And then they trade all these financial derivative based on the oil price, based on the oil contract. So it created a few big financial market that a lot of buyer and seller go there and trade this kind of financial paper in anticipation of making money or hedging, hedging purposes or whatsoever purposes. So after 1980s, the price of oil is being affected by the market demand and supply. OPEC still play a role. OPEC role now is to control the supply, and then the price will be let the market decide. So after 1980s, the pricing of oil moved from discussed price by all the OPEC to a market price. Last time is the Big Four. They set the price to pay the royalty to operate the reserve. So it's much lower, and all the money, all the oil dig out by the reserve are all earned by the Big Seven. Then the stage 2 is the OPEC. Country take over, nationalize all these reserve, and tell people that the oil that come out from here, I set the price. I also set the supply. But now in the 80s, people set up financial instrument to trade the oil, underlying oil commodities, and then it go to supply. It still can be controlled by the OPEC country, but the price got to be decided by the market. So this is the historical development of the oil market in the world. Now, a little bit into the OPEC, Organization of the Petroleum Exporting Country. It was formed in the year 1960 by founding members. Iran is fighting the war now. So as you can see, Iran is a founding members of the OPEC. Iraq also, and Kuwait, Saudi Arabia, and Venezuela. Later on, a lot of other members join in. We have Indonesia, we have Qatar, we have Gabon, we have Libya, UAE. But some of these members came in and then they opt out, then they come in again. So the other members that I put here, some already not a members already, but some continue, but I still put them in. Now again, if I don't talk about the top 10 countries by petroleum reserve, then the video on oil market explained is becoming less complete. So for this slide, I just put in the top 10. You can always go and find it from the International Energy Association, I think IEV or something. This is set up to regulate, to actually regulate the supply, strategic reserve of all the country and all these things. So these are the top 10, and you can see Venezuela is number 1, 305 billion. Of course, Venezuela, everybody heard about it. What happened between Venezuela and USA? Second one is Saudi Arabia. The third one is Iran. Everybody know that Venezuela produce heavy crude oil, which is more difficult to refine. So again, I won't go deeper. These are too technical. These are relating to the technicality and engineering of oil refinery, which is beyond the scope of this video. So for this one, the 10 proven is easily found. You can Google. The information are readily available. Now, How about producing country, the one that produce, keep digging and then keep producing? Number one is USA. They actually produce 14 million per year. And the proven reserve is not highest in the world, it's about 46 billion. But this proven reserve of USA, including shale oil need much more cost to go and dig them out, and processing is also more complicated. So shale oil, after discovery of shale oil, USA become the largest producer in the world, but they are not the largest proven reserve, even including shale oil. The discovery of shale oil allowed USA to become the biggest producer. But because the complexity and the cost involved in digging out shale oil, so it make the oil from USA more price sensitive. Okay, more price sensitive to any fluctuation in the output or the international oil price. Oil price must go to a certain level to make shale oil operation viable. If you go below certain price, then the shale oil, the cost to dig out shale oil will be making a loss, because the cost were higher than the international market oil price. So shale can only be viable if the oil price are above certain level. So again, the rest of the country I won't go through, because if not, this video will be too long, then all you all will fall asleep. Okay, so you can see Saudi Arabia produce about 11 million per year, but they have a huge oil reserve. Russia, Canada, Iraq. And the next 6 country, I also put them down. You can see China is one of them. And Brazil is ranked number 9. Okay, let's fast forward to who are the key players in the oil market in the world. You have to understand this so that you know what are the roles played by them. And when in your daily encounter, when you hear this name, at least you know which group of players they are being referred to. So number 1, we are the national oil producer. So people like Saudi Aramco, Saudi Aramco, these are owned by government. We have the ADNOC, that's owned by the UAE government. We have the Petrobras, this owned by the Brazil government. Now, the next category that you always hear about will be all the oil major. So the international oil company, some of them are partially owned by government, but a lot of them are big oil company listed on the stock exchange, and they are very much commercially driven. They go after profit to reward their shareholders. So you heard about names like ExxonMobil, Shell, BP, Chevron, all these are the top oil company in the world. Now, there are also another group of players in the oil market. These are the traders or the brokers. Now, who are they? For example, Trafigura, and Glencore. So these are the traders. They actually anticipate where the price will go. They actually stockists. They actually stock some of the oil in their oil. They rent some oil tanker, storage tank to store the thing and wait for the price to appreciate. So these are called the broker or trader that give liquidity to the oil market. You need all these trader and broker to make sure that the market, they are ready for buyer and seller. So these are the traders. Okay, now the structure of the oil market is something very interesting, and I really got to make sure that my viewer understand the structure of the oil market. The structure of the oil market actually are 2. They are break down into 2 categories. One is called the price market. That's all the financial market that I talk about, all the pricing, the future market, the option, the swap, and all these things, and the index. The other one is called the fiscal market, meaning that it involves fiscal delivery. So you look at the slide, the paper market are all the financial market in the world, and the paper market is only for reference pricing, only for hedging. So in case that the oil producer think that the price will be weakened, they quickly go ahead, lock in the price through the financial market. But again, the paper market, those traded over exchanges all over the world are only reference. They give a reference. Actual transacted price will be different from the reference price because of the quality of the oil. They are different. So they are heavy crude oil, they are light crude oil, they are sweet, they are sour. So the actual transacted price, when it comes to fiscal market, so that's another segment of the oil market, will be different. So who are those people in the fiscal market? For example, the oil producer like Saudi Aramco, all this, when they produce oil, they sell to who? They sell to all the refinery in the world, such as those refinery in Singapore, and a lot of refinery are owned by the oil major. So the transacted price between these 2 parties they might not be equal to the price traded in the market. They will be based on their own discussed price between these two markets based on the specification of the crude oil produced. So different oil, different type of oil got different pricing. The paper market just to give a reference price. It might not be the price that actually transacted in the physical market. Okay, now we look at, so since the paper market are the market that produce the reference price, so there must be a few of this market globally. So, and of course some of them are the considered the main benchmark, and some of them are still existing because of the different variety of the oil required in or produced in the market. So if we look at some of the oil price benchmark, we have the WTI. There's a kind of oil that's light and sweet and produced in Western Texas, and this market is very much for the North Asia market. They don't usually ship to the rest of the world. Now the Brent crude price is called the price that a lot of people use. So when you heard about the price, the crude price is actually referred to the Brent crude oil price. Now the Brent crude oil price is actually not produced in North Sea. It's not produced in Middle East. It's not produced in elsewhere, but it's based in North Sea. And the North Sea, that's near UK. The kind of oil that produced on the North Sea is lighter, sweet. So it's considered higher quality. So the Brent crude oil refer to oil from the North Sea. Okay, so but internationally, when people refer to the oil price, they refer to the Brent crude oil price. Now there's also another thing called the WCS. That is called the Western Canadian Select. Now, like the name mentioned, these are oil produced in Canada. They are heavy, they are sour because of the sulfur content. So I go further to explain other price benchmark in case you hear this name, and if I don't teach you, then you might think, hey, how come, Hocantalk video never talk about this? Okay, so for completeness, there are also other pricing benchmark. Now there are also the Edmonton Par. There's also Canada one. So it's very much for that North Asian market. How about those Middle East one? Middle East, the pricing is based on the product called, they give you a name called the Dubai Oman. And why Dubai name is still there? Last time Dubai produced some oil, but Dubai now getting lesser lah. So actually the name still remain. It's called Dubai Oman. That's how they call it from last time, so they never change. And then the Middle East oil, which is priced using Dubai Oman name, is actually not so light. It's between light and heavy, and it's also not sweet. It's between sour. It's more towards sour. So it's not considered the highest grade oil. It's not the lowest grade, but it's somewhere in the middle. And then all these oil produced in the Middle East are mainly for Asia, for Singapore, Malaysia, Thailand, Philippines, Japan, and China. So the refinery in Singapore are structured or are engineered and built in such a way to refine this type of oil. So if you want to refine other type of oil, the refinery need to be amended, the engineering, the structure, you need to add something in. So engineering or scientists, they will add some catalyst, some chemical thing to improve the product or the efficiency, the yield that they can derive useful product from the per barrel oil. Okay, I won't go deeper. Again, this is too technical. Now, there are also the Ural oils that is only purely for the Russian market. So, all these, I hope that you all know what are all the oil price benchmark used in the world. But again, when you come to not all the prices, like, now Iran war, they say price going up to 200, price is above $100. These are referred to the Brent crude oil price. That's a North Sea oil. Okay. So after you know all this information, you know the historical development of the oil, you know who are the player, you know who are the largest proven reserve, you know who are the largest producing country, you know there is a paper and physical market, you also know all the benchmark in the world for regarding different type of oil. Now I will tell you which are the top 10 oil trading markets in the world, because all these paper price need to be traded in some stock exchanges or some exchanges, so that there will be people, buyer and seller, and it will be in a regulated environment. They buy, sell, and they know that the other party will deliver the contract or pay money. So I put down there the top 10 oil trading market in the world. So of course, number one is Chicago Mercantile Exchange. That's in USA. The rest I won't go through the name. Neither will I provide any Chinese translation, because I think it's good to be just stick to the English name, so that when my viewers see, they recognize. So the second one will be the one in Europe. So the contract, meaning the future contract traded over 1 year. So you see USA about 2 billion contract traded for a 1 year period. For the Europe, it's about 1.8 billion. Now, third in the ranking is Shanghai, because China is becoming an economic power, so they actually command certain drawing power. So they also set up oil trading in Shanghai Stock Exchange. The volume is catching up. It's about 400 million contract per year. That means once you have a transaction between a buyer and seller, there's a buy, there's a sell, one contract is done, it's considered one. So 1 year, Shanghai got 400 million contract done. Dubai, 50 million. And number 5, which is India market, is about 100 million. Okay, the rest of the market are quite small, but I actually put down there, like for example, rank number 6 is Moscow, 7 is Tokyo, about 30 million. Euronext, small, not significant. Now, and also Brazil, there are 3 of them. I put them on the number 10, but they are still small, so I won't bother to go deeper. Now, one exchange for special mention will be Singapore Exchange, but Singapore Exchange is very much for the OTC. OTC in Chinese is called 场外交易, meaning that party A and party B negotiate the contract themselves. After that, they will register that contract with Singapore Stock Exchange OTC counter to let Singapore Exchange step in to guarantee the performance of this contract, and also for to pay some margin, to pay some upfront fee to guarantee the payment as well. So it's guaranteed performance, guaranteed payment. That's the reason the stock exchange come in to provide an OTC, over the counter trading mechanism, to facilitate this sort of thing. Because sometimes for import exporter, it's called trade financing. For this sort of oil thing, you can create a financial contract and then register with a stock exchange, so that it gives credibility to this sort of contract. Now we are coming to the last slide of today's video. So I want to, if for the completeness of today's topic, oil market, if I don't talk about the petrodollar, I think this video is not complete. So for the last slide of this video, I'm going to talk about the petrodollar and why US dollar is being used to price all the oil product. Now, remember the formation of the OPEC at that time. After they kick out all the 7 sisters, they take back their oil reserve, and then they start to control and produce oil on themselves. During that time, there were some wars with Israel. So in the 1973, there is a big oil embargo, in the sense that all the OPEC actually stopped producing oil by 5% per month, or per day or per month, I can't remember, if the Israel refused to return some land to the Middle Eastern country. So that time the oil price actually surged from $3 per barrel to $12 per barrel. And then the USA and a lot of Western countries cannot take this sudden surge in the high oil prices. So there are negotiations. There is also a threat of military intervention. And so at that time, Middle East countries are quite weak. So after negotiation with with USA, they have no choice but to agree to using US dollar. Who are they? Actually, only one country, Saudi Arabia. There's no formal agreement signed. Actually, there's no formal agreement signed. It's just a understanding that, okay, Saudi Arabia agreed to price all their oil output product in US dollar. They did sign some agreement, but that agreement is called the Technical Commissioner Agreement, in the sense that on a 5 years basis, US government will give them security, will help them to protect their oil reserve, will give them technology, so that to maximize the yield from the reserve in their country. So after Saudi Arabia agreed to sign this technical agreement with USA, which is on the 5 years basis, the rest of the producing country like Iran, Iraq also join in to use US dollar to price their oil products. So that's the reason, that's a term called petrodollar. So there is no agreement signed, but there are some historical events that lead to the reason why all these OPEC countries willing to use US dollar. So that's number one. dollar for security, meaning that US, instead of they worry about all this military intervention, so they agreed that they come to negotiation, they agree, let's use US dollar. And also the second reason why US dollar is being used, there are no other alternative then, because oil is used by many countries as a huge market, so you need a huge a very global currency to trade oil. So at that time pound is very weak because of after the World War, and the pound is diminishing. And that time, how about gold standard? The gold has been cancelled by the gold standard has been removed in the year, I think, 1973 as well. So you cannot use gold to price oil. So at that time, the only alternative is US dollar. So they actually price using US dollar. And the number third reason is called the petrodollar recycling. Because after you receive so much US dollar, you must deploy the US dollar back into something. So at that time, only USA has the largest financial market, financial stock market, financial bond market, financial debt market in the world. So again, to be honest, the only way for the Middle Eastern country after they receive so much US dollar is to invest this money back into the US financial market, especially the treasury market. So in this case, it's called the petrodollar recycling. Not only the US dollar, after negotiation, all the middle OPEC country agreed to price their oil in US dollar. Actually, the only country that agreed first is Saudi Arabia, the rest just follow. They also offer a huge financial market for this country who receive the US dollar to invest back into the market. So that's called petrodollar recycling. So again, market said that there's a certain time period for the agreement. Number one, there's no such agreement. It's very much a technical agreement that roll over on a 5-year basis. And again, things are starting to change now. Because why? I put out there, but things are changing. So again, I'll leave that open for everybody to discuss. Again, there are a few factors. Number one, of course, US is not the only superpower in the world. Number two, everybody see the way US control the Russian US dollar asset, frozen their assets, so everybody is scared. So number three, of course, is emerging of China as the next superpower, and everybody want to diversify. So again, that's the end of today's video. I won't go any deeper. I'll produce more video to talk about those topics that I mentioned just now. I hope you can benefit. I hope you will benefit from my video. And again, subscribe to my video, circulate my video to your friends so that everybody can benefit from my video. Okay, thank you very much for watching. See you next video. Bye bye.